The stock market is erratic. Investors are uncertain. How much, though, does all of that stuff that happens on Wall Street affect us on Main Street? Mike Giordano with financial advisor Williams Wealth Management talking with us about all of that, and I love how you boil it down. So let's go to that first one. How much does what happens on Wall Street affect us on Main Street?
Well, it affects us on Main Street in that most people have investments, and so your investments on Wall Street are bouncing up and down. But the thing about Wall Street versus Main Street is people go, oh, the economy's great. Unemployment's under 4%. People got money in their pockets. There's all these job openings. I know I say this all the time, but this is a lot like Chris over in the weather studio. When he's telling us what's happening right now, that's Main Street. When he's telling us what's going to happen in the next few days, that's what Wall Street's doing. They're looking out, not at July, but they're saying what's going to happen in January, what's going to happen early next year.
Okay, so their nervousness about the future is kind of what's driving what we see at the end of the day every day in the stock market.
Exactly. You're seeing storm clouds out there is what people are seeing. Recession clouds, slowing growth, all these kinds of things, more Fed rate hikes. And so there's a lot of speculation about what's going to happen, but you have to kind of, these forecasts are constantly changing. Just like Chris, he sees storm clouds over in Kansas that are going to get here in 2 days. They might break up and then they never happen, right? Same thing that Wall Street's doing.
So that's speculation. So those of us who are probably going to need to cash in some of those dividends in the next 5 or 10 years, should we still be nervous?
No, that's the thing. We don't need to be nervous, don't need to be erratic. The whole key here is that you need to be able to look past a lot of the noise. And that's why, if you hear a lot of these storm clouds and everything else, a lot of that's already priced into the market. A lot of, a shallow recession is pretty much already priced into the market. So don't be afraid, have your strategy and just keep executing that strategy.
Okay, now, so this is what you do for a living. What should our strategy be? How do we invest wisely right now?
Right. Well, this is why I love coming on with you, Jane, because helping people make good financial decisions helps increase their opportunities. So this is what it's all about. The key thing is if you have a very short time horizon or you're not comfortable with your strategy, that's when you want to pull back. But if you have a longer time horizon, you just need to look past this noise and keep executing your strategy, which means if you got more than 5 years, you can afford to put money in the stock market because the prices will bounce back eventually.
And with the low prices, maybe now's a good time to buy?
Absolutely. I mean, you're looking at that long history, right? And it goes higher over the long term. So lower prices today than you had back in January means that you're buying at a better price.
I can always breathe a little easier after you've been in here. Mike Giordano with Williams Wealth Management. Thanks.
You bet.
Mike on the money. We'll be right back.
We're not erratic.